Hello, guys, and good evening. I'm doing a special show tonight, and I'm going to lay it all out for you guys. My schedule of when I'm expecting things to actually occur and just exactly pretty much how. Uh, I'm expecting the interest rates are going to continue to rise this fall and into this winter, heading into this winter. And I believe that either this is the last rate hike by the Fed or the next one is going to be the last rate hike by the Fed. What they're doing is they're like a man that's in a wooden barrel heading toward Niagara Falls and they don't know it. They're draining $50 billion worth of liquidity out of the system every month, and they're raising interest rates. It's a recipe for disaster because that's the money they put in to prop the system up, to put the system on life support from the 2008 crisis. And now they're withdrawing that money away. So what I'm expecting in the timetable, you guys probably want to know the timetable I'm expecting it to happen at. Before the end of the year this year, I'm expecting the market, the stock market, to react to the raising interest rates. I'm expecting the stock market to react once the U.S. 10-year goes over 3.25%, to be specific. At some point, once it passes that line in the sand, and it goes higher than 3.25% on the U.S. 10-year, all debt's based on the U.S. 10-year. You've got trillions of dollars worth of debt based on the U.S. 10-year. At a certain point, bonds are going to look more profitable to buy in than the stock market. The stock market is, once it starts to fall, right now it's kind of like Willie Coyote and there's nothing under him but air, and he holds up that little sign that says help. That's what it's like. Once it starts to fall, it's just going to be bad, really bad. I'm expecting actually a stock market crash, not just a correction like we had back in the early part of this year. Here's what I'm expecting. I'm expecting that this is going to have an adverse effect on when the stock market falls on cryptocurrency. But I'm not really expecting it to have as big an effect on gold and silver. Now, once the stock market goes below 20,000, I'm expecting a rather severe effect on cryptocurrencies, a quite severe drop in price of cryptocurrencies once the stock market crash occurs. I'm expecting that the stock market is going to bottom out probably below 15,000 before it finally stops. It's going to be an actual crash. And then what's going to happen is the Fed is going to react. Once the stock market crashes are not an immediate thing. They drag out over a period of time. And so as the stock market crashes, when it goes below 20,000, it's going to be putting significant pressure on the Fed to do something. And they will react at a certain point. They're going to be sweating bullets when the stock market's crashing. The Fed is. I'm expecting this market crash to occur this year. I'm expecting the reaction from the Fed either toward the end of this year or early into next year in the first quarter, the Fed to react to the market crash. This is the timetable I'm expecting. Their reaction is going to be one reaction only, to print more money. They're not really going to print it. They're going to set it into the computer to make more money because it's digital. So they're going to do the money creation tool, but big time this time, because it's going to take a big time reaction by the Fed to prop the markets and turn the market around and bring it out of the crash. Immediately, the market's going to start shooting up as soon as the Fed reacts, because they watch what the Fed does. Like that's what the market's all about. Is what's the Fed doing? Are they got our backs? Once the market finds out the Fed's got their backs again, the market's going to react. It's going to move upwards rather swiftly. Cryptocurrency at that point is going to be at its cheapest when the market's at its bottom, probably around 15,000 or maybe a little bit lower. Cryptocurrency then is going to be at its bottom, extremely cheap. Gold and silver will have held its own pretty good. Because once the stock market drops below 20,000, they're going to start to buy gold and silver again. They're going to get frightened. Fear is going to enter in to the marketplace. They're going to go for what they've went for thousands of years as a safe haven. It's kind of like this. I was on a sunny afternoon in Florida playing golf. This is quite a few years ago, back before my back went bad. Used to play golf. And a thunderstorm come up. Right? So they're all out there playing golf, doing their thing. Right? When this thunderstorm hits, they all run for the clubhouse. Safe haven. Right? This is the same way in the markets. They're all out there right now doing their thing. But when the real trouble hits, the thunderstorm is the market crash, and when the market goes below 20,000 and they're all scared to death, they're all going to run back to gold and silver because that is the clubhouse. That's the safe place. That's touching base. And also, when they get out, they're also going to be getting into dollars. So it's going to be dollars, gold, silver during the market crash. But the market crash is going to end somewhere around the early part of next year when the Fed reacts. And immediately, as soon as the Fed reacts, Bitcoin and Litecoin and all these coins will be at their bottom when the Fed reacts. They'll have crashed. Gold and silver will have held their own pretty darn good, right? The dollar will be holding its own pretty darn good right at that point. Probably over 100 on the U.S. dollar index because a lot of people run into the dollar. What's going to happen then is everything's going to turn around 180 degrees. As soon as the Fed reacts to the whole thing and starts injecting this new liquidity in, the dollar's going to start to fall big time. Gold and silver is going to take off. That's when it's really going to take off. The big takeoff for gold and silver. And at the same time, it's going to be the big takeoff for cryptocurrencies. So you're going to have all of these things that have been suffering all this time, like gold, silver, cryptocurrencies too, and the dollar's been riding high, riding strong. It's going to be a reversal of fates. It's going to happen suddenly with the Feds relenting on this track that they're on right now. They're on an unrelenting track, the Fed is, to withdraw liquidity from the system. They're quantitative tightening. They're unrelenting right now on this. They think they're getting away with it. They think they're determined. They're going to continue this process until they balance their budget and all this, balance their bank book and everything. Well, they got 4.3 trillion or something like that to go, you know, and they're going to do it. They're going to do it. They're right on. They're charging right now. They're going to have to turn this ship around when this market crashes. It's going to crash big. As far as the whole financial system locking up, I don't think so. Don't think that's really going to happen. I don't think that we're going to have, it's going to be as bad as a lot of people say. I don't think everything's going to completely lock up, but I do think that during the market crash, that a number of banks are going to start to fail. And there's going to be a debt implosion. It's going to, the whole system is going to start to, liquidity is going to start to really dry up. It's going to be almost like a margin call on everything. I don't care what they say. When this crisis is going to be so bad that they are going to mark to market. And this is going to exacerbate the crisis something desperately. So the Fed's going to react to this crisis, and their big reaction is to turn everything around with money. So we're going to see that turnaround right in the early part of the year, around January, February, March of 2019, the turnaround of the Fed. Then we're going to see the dollar start the process of dying. Its final death. And it's going to fall. But it's not going to fall immediately. It's going to be, again, like the stock market fall. The dollar's fall is going to be a process that takes months. Toward the end, it's going to accelerate faster and faster. At first, it's going to start slow. The first few points it's going to lose them slower, and then faster and faster and faster. And the faster it goes, the faster it's going to go as the months progress into 2019. So as we're going into 2019, the first quarter, the dollar's going to be very slowly starting to die, and a lot of people are going to be still invested in it, and they're not going to want to get out. They're going to see it falling, but they're going to say, oh, they're going to think this isn't it. They're not going to realize it is it. Because the dollar's going to continue to slowly fall into 2019, and somewhere probably around maybe, I'm just going to guess, somewhere around August or September of 2019, the dollar's going to cross the boundary where it's going to fall below 70 on the US dollar index. That's the mark. So it falls below 70 on the US dollar index. That's when it's going to start to fall really, really fast. And that's what's going to lead you into the hyperinflation. The hyperinflation is going to be in the winter of 2019, heading into the following year, 2020. And how all of this is going to start is, in this times table too, is toward the end of this year, when the Fed reacts, around in early part of next year, when the Fed reacts to the crisis, and they turn everything around, you're going to see all these commodities like cryptocurrency, gold, silver, everything's going to take off. But also what you're going to see is something very unusual is going to happen. Back in the 2008 crisis, the Fed, they almost created an economic recovery with the injection of liquidity into the system. They were injecting $80 billion a month into the system, and it was having an effect. It was stimulating, to a certain degree, it was stimulating the economy, even though it was getting trapped. A lot of that money was getting trapped in what's called a liquidity trap. The banks were absorbing the money and not releasing it. They were not lending it out. So it was a liquidity trap. But enough of it stimulated the system to where we almost become close to having an actual economic recovery. It was so close that it actually fooled a lot of people into thinking, hey, you know what, we're in an economic recovery. And you heard it in all the newspapers said, economic recovery, economic recovery. That's because the Fed stimulated the economy to the point with a zero interest rate policy and all this liquidity they were pouring into the system just about had an economic recovery. This time, come the end of this year, when the Fed turns everything around, changes their monetary policy, they will stimulate an economic recovery. They will. We're going to have an economic recovery probably in the first quarter or maybe in the second quarter of 2019. That's the beginning of your hyperinflation, because I'm going to tell you why. For years, we had these guys coming on and telling us, oh, we're going to have a hyperinflation. And the proof of this is we got stores closing, and we've got a bad economy, and there's no jobs, and the job rate, they're lying about the job rate and all this stuff. And they said, this is proof we're going to have a hyperinflation. No, that doesn't cause a hyperinflation. When you got stores closing and you've got money disappearing, that doesn't cause a hyperinflation. That causes fear, and people put their money away. People say, I'm not buying that now. I'm going to save my money because we've got an economic problems. That doesn't cause hyperinflation. What causes the hyperinflation is when people lose confidence in the purchasing power of their money because they see prices rising really fast. Why do prices rise really fast? Because of an economic recovery. A real honest-to-God economic recovery where liquidity is pouring into the system and you've got rising prices. That's the fuel you need to start your hyperinflation. And what will conclude the hyperinflation is the 21 trillion or so dollars that they have actually injected into the system is not accounted for. Also, a tremendous amount of bonds that could come back, like from China, over $1 trillion worth of U.S. Treasury bonds and so forth, just can be a flood of liquidity into the banking system. Then you get your economic, and then you've got the erosion of the dollar to be, it used to be used as a petrodollar to buy oil. If the dollar loses its power to buy oil on top of all of this, this is rocket fuel. And then you get confidence lost because prices start to rise. The people start saying, hey, you know what? I'm going to buy that new car this year. Aren't we in an economic recovery and all this kind of stuff? And they run into the bank and they say, I'm going to buy it this year because it's going to be more expensive next year. And so everything just starts to really, the wheels start to spin really fast in the economy. You're in this economic recovery. All kinds of jobs are being created. Loans are starting to be made from the banking system at that point in time, which is accelerating everything even more because everybody's wanting to do things. They've been stagnant. The economy's been stagnant now for like 10 years. And everybody decides, hey, you know, we're in a recovery now, a real recovery, and nobody will be able to deny that it's an economic recovery. This is going to start the velocity of money starting to go, right? Well, the dollar's already been eroded. It's ready to happen. Then you put these two things together and fire starts to the whole thing, and the whole thing starts to burn the dollar. So into 2019, the dollar is going to be increasing into this hyperinflationary period. And so what I'm expecting is by the time we get to 2020, the dollar is going to be in full burn mode. The dollar is going to be in full burn mode by then. And I mean, this is going to be, because the dollar is the world reserve currency, every time we've had a hyperinflation in other countries, like you go to some place like Venezuela or someplace like Zimbabwe or whatever, having a hyperinflation, you know, they always resort to something else that they can use as a means of exchange or barter other than the currency that's hyperinflating. They always reach out to something. And there's always something there for them to reach out to. Well, guess what, guys? This time, there's no safety net there. Like in Zimbabwe, when their currency was falling, they reached out to the dollar. It's the same way in Venezuela right now. They're using the dollar, gold, silver, but they're also using cryptocurrency. But my point is this time, when it's the dollar that is the hyperinflating currency, there's going to be nothing to reach out to except gold, silver, and cryptocurrencies. That's it. There's no place else. Believe it or not, you can run out there and you think to yourself, hey, you know what? If I want to get out of the dollar and get into some store of value other than the dollar, well, this is the way people think. They think there must be a lot of other alternatives. I mean, after all, it's a big world out there. There must be thousands of different alternatives I can go and I can buy to hedge and put my money into as a store of value other than fiat. But guess what, guys? There isn't. If you're not into fiat and you want a store of value, in other words, you want to buy money, you don't want to buy into the stock market. You can't spend the stock market. You don't want to buy into, you want to put your You want money. You want actual money, and you don't want fiat. What else is there? There's gold, there's silver. See, it's a dead-end street. There's gold, there's silver, and there's cryptocurrency. And so when the dollar dies, all of the other fiats are going to die with it. It's going to be the death of fiat. And all of that value that's stored in fiat right now, everybody, they go down the street, they're like, my house is worth so many dollars. My car is worth so many dollars. This is worth so many dollars. All of that is going to be transferred over. All of the value, because fiat's going to go down to zero, ultimately. And it's going to do it in quite a short period of time. Once the dollar falls, the dollar is the key domino to bring down all of the rest. And once they all fall, they're going to fall very quickly. Once we get into 2020, it's going to be the final burn. They're all going to fall very quickly, and all the value of everything in the world is going to come down on gold, silver, and cryptocurrency. So all of the value of everything is going to be transferred from dollars and other fiat, transferred from fiat into gold, silver, and cryptocurrencies. Three little tiny markets are going to have to absorb all of the entire world's value. I can't begin to tell you how many times the purchasing power of these gold, silver, and cryptocurrencies, how many times that value is going to go up from what it is now. What it is right now is just like nothing compared to what the price is going to go to when this transference of value takes place. And that's what's going to cause the upheaval. Not so much the deflationary event that's coming. It's going to be a crisis, a deflationary crisis toward the end of 2018. That's not going to cause as much trouble as when we move into 2020 and we're in the middle of the hyperinflation and the transition over into a new monetary system, a digital cryptographic blockchain monetary system. When we make that transition is going to be the bad one. That's going to be the disruptive part. That's going to be the second part of this that's going to be so destructive, because that transition is going to take place quick, and everything's set up for fiat. And they're going to have to rip everything out. It's almost like building a new store or something. You got to tear down the parking lot, and you got to tear down the store, take everything to the dump, and then you got to build a whole new store. Well, they're going to have to build a whole new way of transferring money. And what's going to happen is the people that are the early adopters in the cryptocurrency, the gold and silver bugs, all of them are going to make out like bandits. And the people that are only invested in dollars, they're going to get terribly hurt. Terribly. It's all going to happen really quick. The times table is probably by the end of 2020, going into 2021, we're going to be all into the new digital blockchain monetary system. And I'm not exactly sure which coin is going to be the top coin, but I know Bitcoin is going to be in there, and it's very likely Bitcoin could actually be the coin that like the dollar is now, the world reserve currency. It very likely could be. Or it might be one of the contenders, Ethereum, or it could be Ripple, XRP, which is Ripple, could be the next world reserve currency. They're going to vie for position, but it doesn't really matter. Those are the top coins. Those top coins are all going to do good because there's room for all of them. When you're considering to bring over all the value of the whole world into these small asset classes like gold, silver, cryptocurrencies, there's enough value there to pump all of that up to the moon. All of it can go to the moon. Probably all the way down to coin number 540 will have a tremendous value. Because you ever notice all of those coins, like 1,000 different coins, When Bitcoin goes up, they all go up. Well, imagine what would happen if Bitcoin goes up 1,000 times. Not from 6,000 to 12,000, but 1,000 times up. What would happen to all those other coins? I mean, you could actually be looking at, you're not going to say, well, this coin's worth so many dollars anymore. You're going to say it's worth so much Bitcoin. But I mean, it's just, the whole thing is just ridiculous. But then again, look at it. This is the way it's going. I'm just reporting the trend. This is the way the trend's going. And in my mind, it's almost unbelievable that this could actually happen. But I'm watching it happen. It's going to be cataclysmic. Because gold and silver, I think, are still going to have the position that they have now of being relatively exactly the same thing that you have now with gold and silver. You know how it is, you buy gold and silver with fiat. They say fiat gold is worth so much fiat today. Well, they're just going to transfer it over, and gold's going to be worth so much Bitcoin, or so much Litecoin, or so much XRP today. It's already setting up to happen. So we're looking at, probably by the start of 2021, we're looking at everything being almost done and completed. But a terrible disruption toward the end of 2020. A terrible disruption in 2020 when we make the quick transition over. And people are going to be losing fortunes that are invested in the dollar. They're probably, just like in 1929 when they jumped out of windows, we're probably going to be looking at some similar situations. And while at the same time, other people who have bought into the cryptocurrencies early are just going to be unbelievable. They're going to be coming into wealth that they never had, while other people are losing the wealth and fortunes that they've built up for lifetimes. You say this isn't going to cause chaos. This is going to cause unbelievable chaos in the world. And the key, now I've given you the times table. I think the key for everyone out there who wants to profit is buy your gold and silver now, right? And then when you see the stock market crash and everything crash, then you can use your gold and silver to buy into some really, really cheap, dirt cheap cryptocurrencies when the stock market is at its bottom. Because that's when the cryptos will be at their bottom. And get out of those dollars and into these new monetary classes. This is what I think. Now, this is not financial advice, but I'm going to tell you, you're going to be anywhere, you're going to be better than a dollar, because when the market is fully crashed and the cryptocurrencies are at the bottom, the dollar is going to be at the top. That's actually your best time to get out. If you can still buy at that point, if you can still actually buy silver and gold, you might not be able to. Cryptocurrency, you probably will still be able to buy it, and it'll probably be at its cheapest right then at that moment. So you're best off with the cryptocurrencies. I would say you're probably best off right now is to be very careful about the cryptocurrencies right now. Even though the price is down, and even though they'll probably go up higher, especially during the first part of the stock market crash, or moving from now until the stock market crash, the cryptocurrencies will probably go up. But I'd be very careful about them, because when the stock market really crashes big, the cryptocurrency is probably going to crash too. And then right now is probably the best thing the best thing probably anybody could buy right now is probably silver. It's down near its cheapest price it's probably going to go before we could have a silver shortage. Silver is fantastic, physical silver, but you got to buy the physical. You got to keep it in your own possession. Don't store it at a vaulting company. Don't put it in a bank vault, in one of these safety deposit boxes at the bank. Don't trust your banks, because when this crisis comes, they're going to be out for money. It's going to be like it's going to be like a margin call sort of thing, and everybody's going to be out for money. And these vaulting companies, some of them are connected to the banks. They just close right up and lock the doors and put everything into receivership. And good luck getting your physical silver out of there. I mean, they're going to just haul all that physical silver away in a Brinks truck, and all that gold away in a Brinks truck that's stored with the vaulting company, back to into receivership for the bank that the vaulting company was owned by when the bank goes under. And this cascading effect of banks falling could all just start when Deutsche Bank finally fails during this crisis. And this will help the Fed to react even quicker to it, the crisis. We're in for some very interesting times coming up, and it's probably going to be all culminated by the year 2021. Done. And we'll have made the transition into the new monetary system, and things will run a lot smoother. But you're going to have, when that new monetary system finally gets in place, you're going to have the have and the have-nots. The haves are going to be the people that have gold, silver, and cryptocurrencies, and the have-nots are going to be the people who sat around all in fiat. So you could have two people living next door to one another. And one guy's doing really good right now. He's driving a new luxury car. He's got a beautiful house, and he's got $500,000 in the bank or whatever. And you're his neighbor, and you're struggling to survive right now. But you're putting away a little bit of physical silver, a little bit of cryptocurrency away for yourself. And you're not all in dollars. He might be all in dollars. And you'd think that they would have the sense when the dollar starts to go down to get out then. But they're not going to. They're not going to have the sense to get off of that ship as she slowly goes down. And by the time they decide to finally get off of the ship, they're not going to be able to buy very much cryptocurrency because the price is going to be so darn high. And so that little bit that you saved, his $500,000 might only buy as much as you bought with the little bit of money you had. So you might be equal at the end of the crisis. He might not have any more money than you. Where right now, he's driving the luxury car, and he's got the big house, and he's got the $500,000 in the bank. And you're struggling right now, but you got that little bit of cryptocurrency. In the end, you two might be equal. You might be equal to that guy who's got the $500,000 in the bank. Because he'll take that $500,000 finally in the end, and he'll go out and buy crypto, and he's probably not going to get any more than you get for $1,000 now. That's what's coming. This whole thing's going to come fast. It's going to wash over us like a tidal wave. And now you get the times table, and now you know what I'm thinking is going to actually happen. Thanks, you guys, for listening. Like and subscribe. Catch you in the next show. Bye-bye, guys.